South Korea's stock market set a record on Monday. One day later, it nearly hit the 10% limit. The real story is why two chip companies could shake an entire economy. South Korea's stock market just did something almost impossible to ignore. On Monday, the KOSPI closed at a record high, just over 9,000. One day later, it crashed almost 10%, the largest point drop in its history. Samsung fell more than 12%, SK Hynix the same. Out of more than 900 stocks, only 46 rose. But here is the strange part. Even after the crash, the index was still up almost 95% for the year. So this is not a normal recession story. It is a market that nearly doubled, leaned its whole weight on two chip companies, and suddenly discovered how little room it had for disappointment. To understand Korea, start with concentration. Depending on the benchmark, Samsung Electronics and SK Hynix together made up roughly half of the entire market, more than half of the MSCI Korea index, and close to half of the main US-listed Korea ETF. That means a Korea index can look diversified while behaving like a two-company memory chip trade. On June 22nd, SK Hynix even overtook Samsung's common shares by market value for the first time in more than 25 years. Samsung was still larger once preferred shares were counted, but the symbolism mattered. The old electronics champion had been passed by the company most tied to high-bandwidth memory for AI. So when those two stocks fell more than 12% the next day, the whole index had nowhere to hide. The chip story is not just stock market excitement. It is visible in the real economy. In May, South Korea exported a record amount of goods, up more than 50% from a year earlier. Semiconductors alone made up more than 40% of all exports, and they nearly tripled from the year before. Early June data showed the momentum continuing. But the same report revealed a divided economy. Automobile exports fell. Steel exports fell. So Korea is not in a broad industrial boom where everything rises together. It is in one extraordinary AI memory cycle, powerful enough to lift the national numbers, while parts of the older manufacturing economy lag behind. That makes the market strong, but unusually dependent on a single engine. Now for the second puzzle. If exports are breaking records, why is the Korean won still weak? On June 23rd, one US dollar bought roughly 1,500 won. The answer is that trade flows are only one part of the currency. Foreign investors pulled tens of billions of dollars out of Korean stocks in the first 5 months of the year, including a record amount in May alone. That selling turns won back into foreign currency. At the same time, US interest rates stayed above Korea's. The Bank of Korea held its base rate at 2.5% in late May, though two board members wanted a hike, and it nudged up its growth and inflation forecasts for the year. So Korea has an unusual mix: booming chip exports, a weak currency, rising inflation pressure, and a central bank inching closer to tightening. The June 23rd fall also exposed what had built underneath the rally. Margin loans had climbed to a record, just under 39 trillion won. Weeks earlier, new funds had started offering twice the daily move of Samsung and SK Hynix. Products like that do not merely rise faster. When prices reverse, they force selling and amplify losses. Then came another blow. MSCI declined to upgrade South Korea to developed market status, still citing problems with currency access, investor registration, settlement, and short selling. None of this proves AI demand collapsed. The triggers were ordinary: profit-taking, rebalancing, tax worries, regulatory pressure, crowded leverage. The cleanest conclusion is narrower. Korea's market had become so concentrated and so borrowed that a pile of small disappointments could turn into a historic one-day move. Here is the weekly checklist from this point. First, Micron reports earnings after the US close on June 24th. Its pricing and memory demand outlook will help separate a crowded trade reset from a genuine change in the chip cycle. Second, watch whether foreign selling slows and whether the won can stabilize. Third, watch breadth. A healthier Korea market needs more than Samsung and SK Hynix moving together. Fourth, July brings a planned 24-hour onshore currency market, a Bank of Korea meeting on July 16th, and important governance rules taking effect later in the month. My verdict today is simple. Korea's AI export boom is real. The stock market's concentration and leverage risk are also real. One does not cancel the other. This weekly series will track which side changes first: chip demand, currency pressure, foreign flows, or market breadth. This is general educational commentary, not personalized investment advice. Subscribe, and we will update the evidence every week.